following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. We've got a market that's off, well, at least in the S&P cash, off, 0.6% at 2080.89, and we're 1.5 up off the low of the day so far, off almost 12 points on the S&P cash. Volume is moderate so far, 1.7 billion shares. And we're kind of into this Friday and Monday off summer trading binge. We've started to see it. Mondays and Fridays have been lighter volume. Of course, Friday we had a down day and a little stronger than normal volume on Friday. And I suspect that it was the indication that we were going to see a little bit more weakness today. We've got a lot of stuff going on. We're getting in and getting ready for an FOMC meeting. I think it's on the 17th. And we have some other issues going on. But at the moment, we have one that I think is setting the tone, and that is we've got people selling U.S. stocks and then buying and repatriating that cash into some currencies in Asia and otherwhere, or maybe back home, wherever that home may be. But it certainly looks to me, from looking at the trims tabs data and other data, that we have outflows out of our market. They are not big by any stretch of the imagination now, but they are steady. And that is, we have people selling this market. And there's times when, there's no doubt about it. You've got selling, swamping, buying, or buying, selling, swamping. But, the pattern's been that we've got some of these highly short stocks. They bounce, and within a few more days, they're back lower than where they got upgraded. I don't think that that's any different than a great deal of many of the stocks we have out here. I am bearish, but I'm bearish in a frog boiling kind of way, and I suspect from everything I see that we could easily see this market continue to drip, drip, drip a little lower until we do have an actual rate hike. It's probably more about the idea of the rate hike than the actual rate hike. But we know a few things. One, we had a price earning multiple in the S&P 500 that was about 19 going into this last earning season. That's ticked down to about 18. Normally, if you're going to get even an intermediate pullback in the market, you're going to see at least a couple of ticks off that S&P price earnings multiple. I suspect that we could get back down to 15 easily, and that would be about 200 points on the S&P cash if the back of the envelope spreadsheet I put together was right. You have to make some assumptions in it, but I don't think it would be all that surprising to see us back somewhere around the first week of September, getting in and getting ready for a rate hike in interest rates, and see us at 1,900 in the S&P cash. Wouldn't do anything to a long-term bullish case, but just people, I already mentioned recession a week or 10 days ago, just so I would be the first. And, of course, Thursday, the first day we're off 10 points in the S&P cash. Everybody is mentioning it on CNBC finally. The numbers are probably do justify that we are in a moderate, let me put it this, extremely minor recession. And recession's nothing more than 2 quarters of declining growth. We've got our first read, which was 0.7% lower. All we need is that for 6 months in a row to continue. And as far as I can tell, that would be no big deal. What's to say that we stay at 0.7 for 6 months? That would be a recession. The problem is that there are some astronomical assumptions being made in the market, and they are always. Basically, you get analysts who just keep moving up your earnings statement, and some brave CEOs will come out there and say, no, you guys, you can't play that game with me and my company. We aren't just going to let you sit there and continue to move rates up. And you'll see this sometimes where they'll come out and they'll go, we're moving it down. And it was just after a whole bunch of analysts moved it up. And basically that is the analysts saying, things are going to get better. Things are going to get better. And the CEO doesn't say anything, so they just move them up. And the CEO's only legal way to handle this is say that's not justified, and they come out after it. And of course, the analysts get all mad at the people, the CEOs. But it's one of those kind of things that just seems weird, and it is. In the olden days, back when we had the T-Rexes walking the planet, primordial ooze and all that, 10 years ago, it was legal, or at least it wasn't illegal, to mention a great deal of what was going to happen in your company to analysts. And of course, they always started selling first. And if you were smart enough to watch the charts, you saw it too. Now, because they could go to jail for it, CEOs are not real big on it. It's all a wink and a nod now. It's all kind of inferred. It's all kind of nebulous and fuzzy. Nothing that a CEO could ever go to jail for. But this leads to some of the analysts maybe taking the wink and a nod the wrong way. And we see that occasionally. So sometimes, there's supposed to be this Chinese wall between analysts and the trading floors of these big firms. That doesn't exist. I had a friend, or still have a friend. He's not dead or anything. So I still have him, who would tell me about no end to the amount of meetings that were in the bathroom because it was the only place that wasn't being recorded. They'd talk about what they wanted to do, and then they'd go to the meeting room and put on the record exactly what they did want. There's a great place, great part of the Watergate tapes, if you've never heard them, with President Nixon. And they're discussing doing something wrong, just horribly illegal. And all of a sudden, the microphone's under the desk. So it's always kind of a horrible recording. But what you get is that you get this. I'll reenact it here with all my acting skills. Yeah, we could do that. We could arrest him and do this, and we could do that. But it would be wrong. He turns to the microphone and does it just like that. It's a hysterical part. And that's kind of what we have, a lot of kabuki theater in the markets. But for all I can tell, everything that's being upgraded sells off fairly quickly. We don't see a lot of strength out here. Today is a lot about Apple and their WDCC conference. We'll talk about that yet today. But a lot of kabuki theater. I'm looking for our first tests in the S&P cash to come at 2070. We've got, of course, options expiration that cycle starting on Wednesday, and a week from 7 days after that, 7 trading days. After that, we have expiration itself. So we'll be watching how options come in. My guess is that we're going to have light volume. It's not going to be a huge pullback. And the thing that most people, I think, are thinking wrong out here is that even if we had even kind of a decent pullback out here, that it wouldn't be bearish to have a pullback of 200 points on the S&P cash and never see any volume. It wouldn't be bearish. It would be bullish. But they'll all be buying it all the way back down, I suspect. But I'm looking for something around 1900. And we'll see. But it's hard for me to see now with all the data out that the Fed has any real where to hide. They may stop at a 0.25% raise, and that would be it. They may even say they're done. But until it's done, it's kind of like someone standing behind you saying that they're going to pull a hair out. I'm going to pull a hair out. I'm going to pull a hair out. And just the anticipation is more than you can stand. And you'd be better off if they just walked up behind you, grabbed a single hair, and pulled it real quick. the pain would not be anywhere close. And my guess is that as much as they try to dodge and avoid and move, we're going to at least have a quarter point, if not half a point, before the start of the election cycle next year. At least that's my call. As always, we like to start off the day with a little bit of history.
That it's all just a little bit of history repeating.
It is, and today in 1999, Dr. Koop, the former Surgeon General, and I don't know, it's kind of weird to have somebody in an Army outfit be the surgeon. I don't understand the whole point of that, giving him a nice outfit, because the guy wasn't in the military as far as I can remember at any point. Well, Dr. Koop became a big deal in the 90s. He decided to have kind of a website devoted to health, probably about 15 years too early. Everybody was still choking down those burgers from McDonald's that were about ready to stop that last valve that was still working in the person's heart. Anyway, on this day in 1999, Dr. Koop goes public in the NASDAQ, selling almost 10 million shares at $9 apiece. For a brief, shining moment, the founder, Dr. C. Everett Koop, stake is worth more than $50 million. Within a year, the online health company is on its deathbed, and I think it was broke and bankrupt in 15 months. But the euphoric episode never knows any end, and there's always a bunch of suckers to come along and grab something like this. Just you don't be one of them. Of course, very interesting today with Apple and its WWDC conference out here. I've been watching the live blogging of what was going on out there. It doesn't seem to have done a lot for the stock. It's off of $1.18 for Apple today. One of the funniest things, and maybe I'll have time, I'll play it. But one of the funniest things is just how many times Steve Jobs told everybody something and then basically took a truck and just backed up all over it years later. In 2003, Steve Jobs said that even Jesus couldn't sell a subscription service for music. And today, of course, they're launching Beats that they bought for $3 billion. It's unclear, and I thought that the only thing that could make the stock go higher today would be the announcement that they have all 5 major record labels ready to go. I haven't heard anything about it or seen anything about it. I'm watching the live blog here. If anything happens, I will report it as soon as possible. A lot of discussions about what is going on, but for the most part, they are catching up with features, or at least so far, what they've been announcing are features that are already available in Android or on Microsoft. It was kind of funny to be watching CNBC and seeing the commentator for CNBC talking to the gal from Recode. We'll talk about that when we come back, but kind of hysterical. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, we're off almost 12 points on the S&P cash. It was pretty funny, though, that, in 2003 during this conference, Steve Jobs basically said this.
You can say, well, why has this proliferated? Well, because there's no legal alternative. There's no legal alternative that's worth beans. You say, well, what about Press Play and Rhapsody? What about these things? Well, they're both subscription services. You can't just go get a song and pay a little. You have to subscribe to them. And they don't even let you download all the songs. And they don't even let you put all the songs on your MP3 player. They don't let you burn a lot of CDs. Here's Press Play. If you do get some downloads, which you have to pay extra for, you can play them as long as your membership is active. So you pay to download 500 songs, and one day you stop paying your subscription fee, and your entire music library goes away. Here's Rhapsody.
Anyway, later on, basically, he goes on for about 10 minutes during his big show and tells everybody why subscription is such a horrible business. Of course, today they are launching their $10 a month subscription for Beats, and we'll see what happens. It'll probably be after my show is over, but we'll see. If they have all 5 of the major labels, then we probably would see maybe a little bounce in Apple, I suspect, as we come into the end of the day. If they do not, then it is problematic for Apple. And as of Friday, they did not have the contract signed with several large, I think 2 of the 5. So it's not like it's a little. They couldn't even get the first 3. They got those from buying Beats. The problem continues to be that Apple basically decimated the music business and no one wants anything to do with them, and they're still in it. And what's probably even stranger as we look into history is that when Apple started becoming a successful computer company in 1982, Yoko Ono and a bunch of the rest of the people around the Beatles that had Apple records sued Apple computers to make sure that they would never get into the music business. And when 2003, about when the iPod business was coming back, they had to throw a huge wad of cash at Apple Records. In fact, I think they even still get a cut even today just because they did that. So many times what you say will come back and bite you in the rear end. But pretty interesting to see that Steve Jobs thought that this was a horrible business to get into. And for all parts that I think you can see in all the other businesses, all of them are doing rather horribly. All the other competitors that they have, Spotify, Pandora. And the question is, I just don't understand why they think all this money is there. There's a great quote that later on Steve Jobs gets into quoting, and that's from Hunter S. Thompson. And it says, the music business is a cruel and shallow money trench, a long plastic hallway where thieves and pimps run free and good men die like dogs. There's also a negative side. And probably just when you think about all the people that have been cheated and screwed over in the music business, it would fill a library. It's always been one of those places where people basically live off other people's talents. Some are probably worth the money. A great deal are not worth any of it. Anyway, young Turks out here. Turkey's market was rocked today. Probably haven't heard a lot about that. It was down about 5% on the dollar, or at least their currency was. I think their stock market was too. The president, it basically suffered a huge setback in the country's election. The southern part of Turkey is, of course, very favorable to the Kurds, and the current president has been anything but. He's pretty much treating them like the Nazis did in the Second World War to the Jews, and they're not having any of it. So basically this blew up. It looks like they're going to have elections once again in about 6 weeks. We could see additional and ongoing problems in Turkey. And just one more country out there that's starting to get rather shaky and nervous about the stability. And, of course, a sort of NATO ally at the moment. They really don't like us going after the extreme Muslim population south of them. But at this point right now, the Kurds look like they're not going to take it lying down, and they may even have to form a government with the right or far right side of the country, which again is also less Muslim swung. But keep an eye on Turkey out there. It may be one of these flashpoints that just comes up out of nowhere, but we're starting to see a little bit of smoke, and sometimes there is fire out there. Some people have asked me whether I am bearish, and the answer I think is yes, but I'm saying I'm rationally bearish. When we come back from this break, we'll talk more about it.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. A small pop in the S&Ps here. Still off 8.5 points at 2084. Volume still rather tepid. And my guess is that this is light and variable trading today. And at the end of the day, we'll probably close closer to the bottom than we will to the top. And I suspect that will happen again tomorrow and into Wednesday. If you're looking for a bottom, I suspect if you were bullish, that you'd probably be thinking maybe about mid-Wednesday. I am rationally bearish, and what I mean by that is that I'm fairly committed in my newsletters to lower prices, but lower prices over time. I don't think we're going to have any huge blowout. The interest of the FOMC is probably to let the air out of the balloon as slowly as possible. And that means there's going to be a huge amount of back and forth. And, you can chase pennies. I suspect that a lot of people are going to be chasing dollar bills in front of a steamroller. That steamroller is just going to be going extremely slow and on the way down. NASCAR had a guy named Junior Johnson, and he was kind of a big guy. But he ended up winning a lot of races and then starting his own racing team. He had Darrell Waltrip, who won a lot of races for him, and he was the former driver for him. But won some championships, several championships anyway. And one of the commentators asked him whether or not his driver was committed to winning. And he said, well, he's really more dedicated. He said, when you sit down to breakfast, a chicken is dedicated, but the pig is committed. He's talking about bacon and eggs for those people up in Lutz. But he said Darrell was dedicated winning, and I'm basically dedicated to the short side. I'm not committed. I'm not going to kill myself. I've got some reasonable stops, but we started it pretty much at the right time, maybe a half a day early, starting our push into lower prices for the S&P cash. We've had, in both my newsletters, a little bit of pushback, but they're all winning, well, for the most part, winning trades now, and we'll see what happens. I think I've got one that looks a little interesting that might not go my way, but we shall see. I've got till September on it, so one day is not going to be a big deal. But I'm thinking that we probably could see this kind of movement all the way through to September. So I'm not going to be surprised, and I'm not going to be playing for pennies when I think that there's thousands and hundreds of thousands to be made if you can sit on your hands. But I tell you, it will be tough. I do not suspect it will be an easy market to sit back and on your hands and remain short. But the big money is probably in the big trend and not in what is going to be light and variable wins probably through the entire summer. It is a mad market, and we're going to get to charts now. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can post a message in the den if you want me to look at anything specific. We were talking, I think, last Friday, and I showed Tom this too, but it's probably one of the best Gartleys in a while out here. And we brought it up. I think we brought it up on Friday. I hope I did. Hope I'm not losing my mind. But I said this was probably one of the better Gartley patterns setting up, and that was Bank of America. You needed to see this light volume break of the February 13th B point in this Gartley pattern. You certainly got it on Friday. It's starting to pull back. Anything below the B would probably say pulling back to the 1525 area of April 1st. But I think the question was on the XLF. Maybe it was an email someone asked me about it. I said, to me, the bigger pattern out here was the XL, was the things like the Gartley pattern. Let's get it here real quick. Get rid of that, clean this thing up. You know, these things are just hanging around up here at the highs, starting a little pullback out here in the XLF today, which I think coincides with the rest of them. We had a phone call maybe a couple of weeks ago about financials, and I said, maybe the XLF going to hang up here just a little longer. To me, it looked like Wells Fargo had a more likely high. Did I? Wells. Did I get that right? Or did I get it wrong? How come that's not picking it up? What is the Wells Fargo? WFC. Yeah, WFC. Well, oh, there we go. I don't know what I was doing wrong out here. Anyway, this thing drifted up to 1722, getting that reversal back out here today. But you just never saw any volume out here. This thing first hit it with 16 million shares, needed 26 million or 36 million. 26 million if you're just being kind, and that would have been the March 23rd high. 36 million if you wanted the December 29th high. And that's the problem. You just got to sit on some of these for a while. Anyway, this thing that did bust higher with 16 million shares, pulled back in, went back up, reversed once again on 16 million shares, about 8 million shares today, but certainly looks like we're going to have that close below the $55.94 level, which would be probably what you're looking at here. The close, what is that, 56.28. You still have a little bit farther to go to confirm that, but your short signal on WFC would be a close below $55.94, and you would be back in the ball game out here. The volume and the energy off this last leg starting April 6th up till Friday out here, just pretty much about 30% light. compared to the January 14th to the March 3rd move out here. So I'm continuing to look at lighter volumes in a lot of these stocks. I want to see how some of these stocks in China are doing. And we're starting to see some of these Chinese internet stocks do some double tops. Youku is one of them, YOKU. The May 22nd high with 19 million shares at $31.40. We got a dime higher on Friday. We closed back below that high. And today we're basically going to stay and close below that on a little lighter volume out here. But pretty decent and huge risk reward, because you really don't have anything out here for the previous low till $11.85. And that saw that just on March 31st. So this thing's had a huge move of where it's basically doubled. Well, it's 200% higher in this high. And that would not be surprised to see this at least come back to this gap around the 23rd, where this thing did have some high volume out here. But it's got super high short interest at the same time. So be wary of that. What else do we have? Let me update my charts up here just to make sure I got everything going right. Other things out here, we got a few of these real estate companies that have been hit fairly hard. They're starting to make lower volume lows. Weingard Realty is finally starting to see something. The volume didn't decrease enough to make me think that this is over, but at least in comparison to the December 16th low at $32.89, 2.3 million shares. Symbol WRI on this, by the way. Came into it with light volume on April 30th, basically same volume of that April 30th on Friday out here. And energy was pretty strong. You had kind of a huge day up and it just fizzled. That's normally an exhaustion day when you get all that volume and you really don't break out. You pull right back into the trading range. A lot of these stocks are acting like that, and I suspect it is shorts being squeezed out. As soon as they have covered, the whole thing rolls back over one more time. Western refining, starting to see a few of the oil companies out here start to at least think about making a bottom. In the case of Western refining, symbol is WRN. We've got a couple of lows in this mid $42 level. Had a high volume low on May 6th at 42.35. Went below it on Thursday of last week with 1 million shares. Friday, you basically bounced back into the trading range with 1 million shares. And today, light volume and a doji. So this is going to be a good indicator probably of where the stock is going if you want to watch it tomorrow and see how that happens. What else do we have out here? Prothena, okay. Got a lot of stocks out here in this energy sector that are bouncing around the lows. Sometimes the volume does decrease. Got another one that's setting up kind of that same way too, and that is you've got a decent volume low on May 7th on Oak and Oak Partners, OKS symbol, $37.42. 1.4 million shares, got into it on Friday with 1 million shares. A little doji out here on light volume today. So again, a lot of these dojis going to come on the halfway up or halfway down move when they come and hit these medium term swings, like the May 7th one in this. So watch it tomorrow. Another one in the energy sector looking like volume is starting to shrink a little bit is Oceaneering International, of course, offshore drill rig work. And this one had its huge high volume low February 12th, $49.15. Got into it with 2.6 million shares on the 17th. So it has a huge run up, 59.65, and comes all the way back once again out here. Never good. That leaves a lot of people on the wrong side of this trade. But you're back below that low, so maybe you've got a bigger trading range. You wanted less than 2.6 million shares and definitely less than 6.3 million shares, and you certainly got that. Like I said, though, I suspect that we're looking at $53 on crude, and that's probably going to make a lot of these things go down a little bit lower. When we look at commodities, we've got gold up about $5 at 11.73. We got silver off 2 cents. We've got platinum up $6. We've got, what else out here? Crude off $1, which is really what I wanted to be looking for. And $58. I suspect that we probably stumble down over the next couple of weeks, but I'm looking for this thing to probably move back slowly to that 53, 50, maybe high $55 level. And it's going to be probably quiet, at least in that space, for a while. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and or you can post a message in the den if you want something for me to look at. One of the stocks that is up and has at least a little volume out here today, at least compared to the April 24th high, is Nordic American Tankers, NAT. 2.2 million shares that day. We've got 2.4 million shares today. What we don't have is the volume that you'd like to see, which is 4.9 million shares, to release all ambiguity in this stock, and that is when that had 5 million shares on January 12th at 12.08. You really never saw that kind of push back up through that high. That was an exhaustion move on that January 12th high, and you got a pop up here, and the volume's ambiguous at the best, but you do have it. So tie goes to a runner. Another oil company out here with a light volume around these previous lows. January 29th, Murphy Oil, MUR on the symbol on that one. January 29th, $42.19. 4 million shares. Got into it last couple of days with 1.6 million shares. And you really need to close above 42.19 to get back into the trading range. But not a bad looking stock. What I dislike about these, or most of these oil stocks, is the pullback to these lows. Did not signify some kind of V bottom, but more of a U bottom. And that move from April 8th at 51.09 down to Friday and today's low continues to suggest that there's more than a decent amount of energy, and there hasn't been a lack of sellers. They've been out there fairly strong. What else do we have? There's a few out here bouncing around. Kellogg Company. I guess we're all eating our Rice Krispies, Snap, Crackle, and Pop. But we've got a nice low that this thing's been bouncing off of for a while in the $61 range. It came down on big volume on February 13th with 4 million shares at $61.82. K is the symbol on this, by the way. You come back into it with 2.4 million shares, you bounce, you break the previous high. You've got decent volume up there. You pull back and make an ABC down, and we're right back down to that $61 level with a nice little pattern out here called the doji today. Again, tomorrow is going to be fairly interesting in a handful of these stocks where we see if there is any more sellers in this. Is this the halfway move down or the end of the move in Kellogg's? And of course, if we start moving lower, some of these safety stocks can find people buying them, thinking that they will go down less than the stocks that are highly visible and the ones talked about the most. So we'll continue to keep an eye on that. In the meantime, give me a call, 877-927-6648, and email me at path@tfnn.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had a little bounce out here in the market. We're off, 7 points on the S&P cash now. Basically coinciding with Apple's discussion of their new music service. And I think a lot of people were getting the cart before the horse and finding out whether or not this would be different than all the other music streaming services. And I think the volume says it all. We thought volume was light coming into this. It's even lighter now in this 5-point bounce off the low. Just not a lot. Like I said, light and variable trading. Do not get too fired up on either a down move or an up move out here. I think it's going to be a lot more noise than signal, and we're going to have to watch over time. Probably 5-minute charts are not going to be doing us a lot of good this summer. I think we're going to have to be looking at much longer out here. Got some email out here. Okay. Everybody knows now. Okay. Let's see what else. Dollar index off $1, and of course, again, you would normally see gold really move up on something like that. That it is not is somewhat problematic to me, and that is what else we have going on. Anyway, Kellogg out here, we're talking about, if you start seeing this bounce, that may be a good indication that people are moving out of the stocks that they think are, of course, risky into stuff that people will have to have. And, of course, pretty decent when everybody gets all euphoric. These stocks tend to pull back, and when everybody gets nervous, money comes back into them. But not a lot of push to get Kellogg's any lower out here. Joy Global is also looking at least like it's getting ready to test it. I want to be watching this over the next couple of days. It's got some decent volume of 2.8 million shares from the March 11th low at $37.77. We still have, about 50 cents more to go into that, so I'm watching that for tomorrow. Volume, basically today, 5.9 million shares, so you have to take a look at that. We looked at that one. What else did I want to look at here? We got just enough time for one or two left. GWPH, this is the marijuana stock. They are the only company to actually have a license to develop medications based on the herb. But pretty light volume up here. This has been one that Kramer's been pushing, so watch out. There are a bunch of these stocks that he pushed up to ludicrous levels. One thing that we do know is there isn't a lot of volume up here. April 27th, we had 126.78 for the high on this. GWPH is the symbol, by the way. Came into it on Friday with half the volume, just hanging out here. This could drop down below 100 in a heartbeat. A lot of speculations in this, and of course, the idea is that they will have some drugs that would replace the heroin-based drugs and the poppy-based drugs out here based on marijuana. It'd be less addictive, of course, is what they're saying. But the question is, would people be happy with the pain being removed but not getting the massive buzz? And guess if you're going to get hammered, you might as well get hammered. But half the volume out here, watch this over the next few days. I think it will be telling. And like I said, this one is one that could move incredibly fast over the next few days. In the meantime, sell when you can, not when you have to. Look forward to the next 2 hours with the Tom O'Brien, our boss here at TFNN. We'll be back tomorrow, same bat channel, same bat time, channel 14, Tiger TV.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.